Hello and welcome to Startup Street. I'm Arundhati Ramnan and with me is Shruti Mishra. These are the top headlines from the startup world. Twitter boss Elon Musk says he has hired a new CEO, tweets that she will start at the company in around 6 weeks, adds he will transition to the role of executive chairman and chief technology officer. Reports suggest Linda Yaccarino, who heads advertising at NBC Universal, could be the chosen one.
Sequoia India invests $3 million in Incore Semiconductors, marking its second fund infusion in a semiconductor startup in the country. Incore, which is building RISC processor cores in India, raising the funding from Sequoia as part of its seed funding round.
InstaMojo, a solutions provider for D2C businesses, records 150% year-on-year growth to become EBITDA profitable in 2023. The firm is looking to onboard an additional 4 lakh businesses by FY24.
Alphabet CEO Sundar Pichai will meet European Commission Deputy Chief Vera Jourova and EU Industry Chief Thierry Breton in Brussels on May 24th. Breton is in charge of digital rules that will require Alphabet's Google and other tech giants to allow business users to access data generated on its platform, among other obligations.
Tesla will recall more than 11 lakh both imported and China-made ones. China's market regulator said the recall, effective May 29, was filed by the US electric vehicle giant in accordance with China's management rules for deficient vehicle recall.
Those are the headlines we've been tracking for you this evening on What's Brewing. As tech valuations tumble globally, India's most valued startups are becoming targets for valuation markdowns, Pine Labs and PharmEasy being the latest. Akhil Vishwanath joins us with more details.
That's right. It has been a week of valuation markdowns on Startup Street. Neuberger Berman has today slashed the valuation of fintech major Pine Labs to about $3 billion from $5 billion earlier. Remember, this comes at a time when Pine Labs is working towards a public offer. When it comes to online pharmacy unicorn PharmEasy, the New York-based investment firm has cut the valuation to $4.4 billion from $5.6 billion earlier. Now, Pine Labs and PharmEasy are not the only ones to have seen a trimming of their valuations. A series of India's most valued startups have suffered valuation markdowns at the hands of investors since last year. Just a few days ago, the Vanguard Group reduced ride-hailing giant Ola's valuation to $4.8 billion from $7.4 billion earlier. While we see these valuation drawdowns, what we have to keep in mind is not all of the company's investors have cut the valuations. Mostly the US-based ones have cut the valuation of the shares they hold while they file their quarterly accounts. But why do they do it? Well, at regular intervals, they have to tell their investors how much they would make if they were to sell their holding in a company here and now in the current market conditions. So for some, the market value of a listed peer is a good parameter. Last week, Invesco cut Swiggy's valuation for the second time in less than a year. While Swiggy's valuation stands at over $10 billion, Invesco saw it at $5.5 billion by tracking the fall in Zomato's market capitalization to less than $6 billion this January. Even India's most valued startup, Byju, has not been immune to these markdowns. Valued at $22 billion in its last fundraise, BlackRock and Prosus have dropped it to $11 billion and $6 billion, respectively. Mind you, these valuation revisions have also hurt investors. Oyo's lead investor, SoftBank, for instance, has cut the IPO-bound company's valuation to $2.7 billion from $9.6 billion last year. A series of these in its portfolio has meant that for FY23, SoftBank's Vision Fund has posted a record $32 billion loss. In short, the global tech rout has not really been kind, and investors are now starting to reevaluate the sky-high valuations that we've seen in recent years. Back to you.
Absolutely, Akhil. So big valuation markdowns there for some of India's unicorns. Thank you so much for those details. Now, the last few weeks have seen a sudden increase in WhatsApp users in India receiving international calls from unknown numbers. Taking cognizance of the matter, the IT Ministry has sent a notice to the messaging platform to look into the growing menace of international spam calls. Aishwarya Anand is here with the details. Aishwarya?
That's right. The IT Ministry on Thursday said that it will send a notice to the Meta-owned messaging and calling platform WhatsApp to look into the growing menace of international spam calls. Calling it a misuse and breach of users' privacy, MeitY Minister Rajiv Chandrasekhar said, and I quote, "Digital platforms are responsible and accountable for ensuring the safety of digital Nagriks. If there is an issue of spam, it is certainly an issue WhatsApp should look at, or any messenger platform should look at. Government will respond to every alleged misuse or alleged breach of privacy end quote. In response to this, WhatsApp, which has close to 500 million users in India, has announced it is ramping up its artificial intelligence and machine learning systems to bring down such incidents. In a statement to CNBC-TV18, WhatsApp said, and I quote, "Our new enforcement will reduce the current calling rate by at least 50%, and we expect to be able to control the current incidents effectively. Protecting the privacy and security of users is fundamental to Meta and to WhatsApp. We are fully aligned with the government's goal of keeping users safe," end quote. Earlier, Truecaller also told CNBC-TV18 that it will soon launch a feature that will help users identify spam calls and messaging platforms, including WhatsApp. Back to you.
Thank you, Aishwarya, for those details. Appreciate you joining us. Moving on, Bangalore-based tech distribution and logistics platform Ripplr has raised $40 million in a Series B round of funding. The round was led by Fireside Ventures. The fundraising also saw participation from new investors Bikaji and Neo Foods, along with existing investors 314 Capital, Zephyr Peacock, and Japanese conglomerate Sojitz Corporation. To talk to us about the road ahead at Ripplr, joining me now is its co-founder Abhishek Nehru. Also joining us is my colleague Arundhati. Abhishek, many thanks for joining us on Startup Street, and congratulations on the fundraise. I believe the round also witnessed debt participation from Stride Ventures, Ulterior Capital, Northern Arc Investments, and Trifecta Capital. Can you tell us of the $40 million, how much was equity and how much was debt? Also, with this fundraise, what is the current valuation of the company?
Thanks, Shruti and Arundhati, to have me on this show. Firstly, I would like to thank all my incoming new investors, Fireside Ventures, for leading this round. Mr. Deepak Agarwal, who is the promoter of Bikaji Foods, who invested, did a minor investment on his personal capacity, and Mr. Adarsh Jalan from Neo Food. All our present investors have also, participated in this round. That shows the kind of confidence they have in our business. Secondly, on the equity and the debt split, we have raised $28 million in equity, and the balance $12 million comes from the debt, venture debt companies. About valuation, we feel that valuation is a vanity metrics. Even though we are happy our valuation has been growing year on year, but we don't focus. We feel that profitability is the reality. So our focus is to grow profitability and become profitability very, fast and consistently grow. So that's how we are right now.
All right. Now you've raised the $40 million. Take us through the fund allocation plans. What markets are you eyeing for expansion? And also talk to us about any new offerings that you might have in the pipeline.
Absolutely, Arundhati. So we have been growing exponentially for the last 4 years, going deep in the South India. Our next leg of growth will come from the North and the West zone. That's what we are planning to scale up. That market is almost 4 to 5 times of South zone of India. So that's our next focus. Secondly, we have built a network for our supply chain, a network and a platform for supply chain. So we will be also scaling up our supply chain business aggressively. So our new offerings obviously will go deep with our DaaS, which is distribution as a logistics, as a service, and also start expanding our supply chain platform and distribution. So that's how the new leg of growth will come in this organization.
Okay, all right. Abhishek, like you mentioned, Ripplr is a plug-and-play integrated distribution network that offers distribution as a service to brands. So share some use cases to explain what kind of efficiency you bring to your clients and how do you basically help them optimize supply chain inefficiencies. What is your tech edge?
Right. So in the last 4 years, Shruti, we have built a full stack platform, starting from, order management to the warehouse management, collection management. And this is a very well integrated, complete platform, which is very rarely available. Now, with this platform active for the last 3.5, 4 years, we have a lot of data on the platform. And with now predictive analysis, analytics, what we are able to do now is that optimize inventory. That means that keep the right inventory for the right market, and then optimize our orders, kind of take the right orders from the retailers and fulfill the right orders. Our fulfillment rates are going up, day on day, because we are able to keep the right inventory for the right market. And, with all the right products at the right time, we are even able to reduce our fulfillment cost and returns. So that's how the whole platform works on an integrated way. And the best part is that it's not only about the platform, you have to execute it. And we being a full stack distribution and supply chain company, we even execute that on the ground.
Right.
So that's the edge Ripplr has over others.
So that's the edge that you have over others. Now, you've grown exponentially in the last 4 years, scaled businesses across 12 cities, and Ripplr is also operationally profitable. So take me through the current business growth numbers and where do you see the next leg of growth coming from?
Yeah. So, as I have told that, we have been going deep in South. We plan to go deeper in South. At a broad level, if you see, it's a 200 by 2025 FMCG market in India will be a $200 billion market. We have just scratched the surface. So the huge scope across India. Secondly, we are going deep. Even if you look at the retailer basket size, we are even now 10 or 15% of a retailer basket size. So we plan to increase our retailer basket size, go deep in South India, and also scale up in Western North India. So that is the plan, how we will scale up. Secondly, you would see a lot of focus of the present government in reducing supply chain and making supply chain more efficient. So our platform is ready for that next level of growth in supply chain management and giving supply chain solutions, a full stack solution, which doesn't mean only a tech platform, also executed on the tech platform. So that's the next leg of growth.
All right. Okay. Abhishek, one final question. The Indian FMCG business is one of the fastest growing markets globally. There is an increasing focus on offline expansion that we see with D2C brands after they acquire a strong consumer franchise. How do you plan to further tap this high potential market? And if you can share some of your future growth targets.
All right. So, Shruti, we have built a deep network of distribution on our platform. Now, the biggest challenge once the D2C brands have taste some success online is that how do they go offline? So we help them go offline, solve their discovery and reach problem, which is the first biggest problem. So with our network deep into the South market, now we are expanding in North and South. We will help this brand go on the shelf, which is the biggest challenge, solve their discovery problem. And then after that, once the brand has tasted success online, they start scaling them offline. If you know, offline is still 70-75% of the market. And if you are able to solve their discovery problem, take them to the retail stores and their product starts, moving off the shelf, then we can, scale them up across India. So that's how we plan to help D2C brands go online. Our D2C brands, our deep focus is on the D2C brands now. Because most of the brands are now planning to go offline, and we are the answers to take them offline and solve the discovery problem in the top 19-20 cities immediately.
Right. So your focus will be on D2C brands. All right, Abhishek, thank you so much for joining us on the show. But we're completely out of time and we wish you all the best going forward.
Thank you. Thank you, Shruti. Thank you, Arundhati.
On that note, it is time for us to head into a short break. But coming up on Investor Eye, Homegrown Venture Capital Fund, Chiratae Ventures has concluded the fundraising for its first Chiratae Growth Fund. We bring you all of those details on the other side. Stay tuned.
Homegrown Venture Capital Fund, Chiratae Ventures, has concluded the fundraising for its first growth fund of 1,001 crore rupees. The fund was oversubscribed by 34%. It will invest in the growth rounds of tech startups raising Series C and beyond rounds, both from its portfolio and outside, and is going to be sector agnostic. Now, across the 6 funds, the Chiratae funds collectively manages $1.1 billion in AUM and has made over 130 investments so far. So joining me now to talk about plans for this fund and the investment strategy is Sudhir Sethi, the founder and chairman of Chiratae Ventures. Sudhir, welcome to Startup Street and thank you for your time here on CNBC-TV18. But, before anything else, in recent years, many VC firms in India have raised these large funds and they've sparked some concerns about responsible allocation, particularly for early stage startups, because some critics question if there are enough viable companies in the Indian market to absorb this kind of investment. Just this week, you're the third fund we're speaking to about, investing in new age companies. Tell us your thoughts, what your investment strategy is.
Well, thank you for inviting me here. This is our first growth fund. And number one, on your point of large fund, this is not a large growth fund. Number two, we are talking about investing in our own portfolio with the right governance, as well as outside our portfolio in growth stage companies. In technology, there are very few funds. The market is deep. And more important, at this point of time, the valuations are also lower than perhaps at the exuberance a year and a half back. So it's a good opportunity to invest in companies. Our investments are going to be in what I call alpha companies, which are scaled market leaders, dominant in India, going abroad, have manufacturing units underneath them if they're consumer or B2B companies or SaaS companies otherwise. And these companies are not making losses. They're growing, and they need capital. They need support from people like us to grow inorganically or organically outside. And then there are market leaders who are in the range of becoming what I call $1 billion companies or $500 million revenue companies as such. In our own portfolio, we have 3 companies approaching $1 billion revenue. So I think these are the opportunities in technology. And I call it every tech, because we are a technology in consumer, in the whole agri-tech space, in SaaS, in B2B, health, etc., etc.
Sure. You know, what is the total number of companies that you've identified to invest in, inside, in your portfolio and outside, and what are the average check sizes?
The companies will be between 10 and 15. It's a concentrated portfolio, and the average check sizes will be $7.5 to $15 million.
And, Sudhir, while you said you're going to be sector agnostic, what are the preferred themes specifically within tech? Given the current macroeconomic conditions, and what will be the investment cycle? How soon are you going to deploy this capital?
So the fund has an investment cycle of 2 years. So it's 23 and 24 broadly.
Okay.
We are investing in companies. So let's take sector by sector, consumer and B2B, and health as an example, or even fintech. We are investing in companies which are in the process of achieving population scale revenue, market dominance in India, and are in the process of going global. Today, out of our companies, 3 billion revenue. Our 78 active companies have a revenue of 3 billion, and about $500 million comes from international revenue. And that's very, very important, because these are stellar companies who at some point in the next 3 to 5 years will go public as such. So very, very crucial population scale companies, if not today, but definitely tomorrow.
Well, let me pick up from there. So the 3 to 5 companies likely to go public in the next few years. You've had exits almost every year, or if not every year, for the past decade or so. What's lined up for this year? I know last time we spoke, you said there may be 3 to 5 companies this year, and that was last year. Any IPOs among your portfolio companies?
Well, I think as and when they come in, obviously the market will know. But certainly exits, we've been very diligent and disciplined about exits. It's the 12th year in a row we are returning to our to our investors at this point. We are investing $100 to $150 million a year, and we are divesting $100 to $150 million a year at this point.
Finally, Sudhir, the last time we spoke, I recall you said that, almost 70% of your portfolio companies have grown faster in the last 2 years than they did pre-COVID. But at the same time, we're also worried about some of the companies whose burn may not have reduced. They may not be able to attract more capital. Has the situation gotten any better after what's been a tough past year, or are we not really there yet?
I think the companies which have grown faster during COVID times or post-COVID times, then they have been very disciplined about reducing the burn, knocking off all contiguous businesses which were making losses, and started growing in their core business as such. Those who did not, obviously, are still struggling as such. But I think I'm very pleased that at this point of time, a bulk of our companies are doing well. I think we've got to watch out for governance. We've got to watch out for a very high degree of diligence in the market space. There is capital available for follow-on rounds. Last year, that is 2022, our companies raised 1.15 billion worth of follow-on rounds, and the year before that 1 billion as such. So I think we are clear that good companies are raising capital, both secondary and primary. Lenskart just completed a $500 million round. And there are 2-3 other companies in our portfolio who are actually raising large rounds right now. So I think we are bullish about the fact that valuations are lower, and to that extent, large pools of capital are available for very good companies.
All right, Sudhir, good companies always find the capital. On that note, we're going to thank you for your time here on CNBC-TV18. Always a pleasure speaking to you.
Thank you very much. All the best.
It is Friday and it's time to take stock of all the deals in the startup space. This week saw 15 deals worth $90 million. This, according to Venture Intelligence. Here are some of the notable deals. Digital distribution platform Ripplr got $40 million from Fireside Ventures, 314 Capital and others. Health tech startup THB raised $20 million from Filter Capital, Edelweiss Private Equity and others, while Property Pistol bagged $5.48 million from ICICI Bank and Baring India.
Well, that's not all. Escrow banking platform Castler attracted $5 million from Stride Ventures and others, while EV-based logistics firm Zingo got $5 million from Delta Corp Holdings and LC Nova. According to Venture Intelligence, this year has seen a total of 211 deals worth over $2.6 billion. With that, it's a wrap on this edition of Startup Street. Stay tuned for more news and updates.